Andy, why did you write the book, Stock Market Cash Flow and 401k? What was your motivation for doing it? Because it's a lot of work to write a book.
Well, starting with 401ks, I just feel that, to be blunt, people with 401ks are going to get screwed. There are three sides to every coin. There's heads, there's tails, and intelligence is found when you can come to the edge, because that's where I can see both sides. And all 401ks is the other side. You have Wall Street. What do they get out of it? What is their vision of 401k? How do they see it? You have the tax ramifications, and you have the employer who gets a great break when he can just cut you off and say goodbye. Look, when I went to school, I got about half the answers right, and I got an F anyway. If you only do half as well, you get an F in school. If half the people have 70 grand, that's a failed program. Now, if you're an executive that makes $1 million a year, you pack it away in your 401k, you might have something. But for the average guy that's probably listening to this that wants to do better, you name one person in this world that said, I was poor and broke, I put my money in a 401k, and now I'm rich. I just don't think that happens.
There's two kinds of pensions throughout the world, only two. One is like a 401k, defined contribution, which Andy is an expert at. And the second is called defined benefit, which is industrial age pension plans. And my co-author is Edward Siddell. He's a former SEC attorney. And he got so sick and tired of watching the teachers, firefighters, and police officers and labor union guys ripping off the pensions. And the average guy doesn't know that. So they think, so the old guys who have a defined benefit, like the firefighters and teachers, I have a defined benefit pension plan. It's a guarantee I'm going to get a pension. But they're being robbed blind. And your generation is being robbed blind in a 401k. So we're not saying don't get a 401k. We don't give it financial advice. But you just have to know how stupid you are to think of that way.
If you're an idiot, you don't put your money in, I don't care what asset class you're in.
Warren Buffett owned Delta Airlines and he owned Fruit of the Loom underwear. One is traded, one is not. He woke up one day after COVID, said, I'm done, and sold all his airlines in one day. Gone, liquid, out. If you wanted to sell Fruit of the Loom, you wouldn't be able to do that because it's not a traded business. Paper is the most widely held asset class by the average person because of 401ks and IRAs and stuff like that. I would say, and I don't have data to back it up, but it'd be my opinion that there is no asset class that people are more involved in with less education than paper assets. If I find a real estate guy, if he's been around a few years, he probably has to know something or he'd been wiped out long ago. So the reason this program's important is, does it make sense to you and to your spirit to say, should I invest my money in something I don't understand? If the answer to that is no, well then start to understand or get out and invest in something else. Well, if you look at a financial statement, a pension is a function of the income statement. A 401k is a function of the balance sheet. So a pension is about income from a company that lasts you for the rest of your life if it's solvent. A 401k is a function of net worth, where you're building something in your asset column supposedly, but it's really in Wall Street's asset column, assets under management. So even that shift from pensions to 401ks, think about that. You took a fundamental shift from a function of cash flow to a function of net worth, and no one even freaking knew the difference. So if you're going to be in a 401k, John says the average balance is 100,000, but the median is 70. Robert, that means half the people in those things, bottom half, that's a year's worth of money. So you're going to go from 65 to 90 with 70 grand. And if the market crashes and cuts in half, now you got $35,000. So the issue I have with a 401k is, if you're expecting to retire with dignity in a 401k.
The reason I talk about paper assets as a category is because paper assets are liquid and real estate is not. Gold, silver, Bitcoin are liquid. Real estate is not. Businesses are not liquid. And so when somebody says, well, should I jump into real estate? I go, you gotta be an idiot. You stay with your 401k. So I'm not against the 401k. I'm not against stocks, bonds, mutual funds.
One of the books that I love as much as Rich Dad Poor Dad is the cash flow quadrant. So if a person understands that, that will help them with their decision, right? I mean, if I am an employee, they're going to present me with a 401k plan. If I'm an investor, that's not going to be
I quadrant, right?
Yeah, I quadrant. And so
and most people in the S have
IRAs.
IRAs, which is kind of it's a different 401k, but it's for self-employed people. So E's and S's have 401ks and IRAs and SEPs. I wouldn't touch them either. So go ahead.
People, here's what's interesting. There's a lot of greed in the world, a lot of it. And if I was in my 20s, right, and up and coming and get into life, or if my son, when he gets that age, I'm going to say, son, people want your money. They're going to want it. Your employer wants to give you less of it. That's why they do a 401k instead of a pension. They want to give you less money. They want to keep most of it. The government wants your money through taxes, right? And the guys who want your money more than anyone else is Wall Street. So what I would say is just look at both sides. If Robert and I were going to do a business deal together, we'd say, okay, this is what we're going to put in, and this is what we hope to get out, and this is how it's, it may or may not work like that, but you need to know what Wall Street is going to do with that money and how much Wall Street's going to make. When you look at an average person, they're people,
average.
They'll say, where's their money at? It's in their house, and people think their house is an asset. And it's in their...
Yeah, after 2008, it was a sub-asset.
Yeah,
subprime.
and then you have your retirement. So Wall Street looks at this, and the bankers look at this. The bankers want your mortgage, because they're going to charge you interest there. But Wall Street wants your 401k, because they're going to take your fees. You'll find that your mortgage is your liability, but it's the bank's asset. Your house payment is your expense, but it's the bank's income. Well, your 401k is Wall Street's asset because the fees you pay is their income.
When I got out of the Marine Corps, my classmates went to fly for a little company called United Airlines. In 2005, Wall Street ripped off their pension. So that's why I wrote this book here, Stole My Pension. Being a hardcore perma-bear pessimist on the stock market, the reason I'm not in it is my guys they're saying the biggest crash is still coming in the stock market. So if you're sitting there with a pension and you're sitting with a 401k, and I think it's Schiff and the other guy, they're saying by April there's going to be this crash because you can't keep pumping fake money. Where the Fed takes money from the poor and gives it to the rich. And so the rich is the stock market. So everybody's floating around happy as Larry, the stock market going higher than higher. But the pessimists like me are saying it can't last forever. As a person who invests in real estate and in businesses and gold, silver, and Bitcoin, I control my returns. The reason I'm not in the stock market is I don't have much control. The advantage of stocks, paper assets, is they're liquid. It's also the disadvantage. And so you know the disadvantage, then there's things you can do, which is what Andy teaches, which is options, which is what John does, which is options. It's all insurance. And if you understand that, you might have a prayer. You might actually make more money off of options than you do from the stock if you know what you're doing. I took options trading for 3 years in my brain. I'm a real estate guy. I'm very slow.
If you own paper assets, you can look at it two ways. You can say, I'm either owning a business or I'm trading a stock. If you want to do it like Buffett does, own the business, understand its financials, understand the balance sheet, understand the income statement, understand the debt, understand the assets and liabilities. Then you're a true business owner with the advantage of if you don't like what you see anymore, you can leave with liquidity. But if you're just trading a stock, look, Warren Buffett wants people to buy cans of Coca-Cola so he can get a dividend. In the same way Robert would invest in Kenny to share in the rents, Buffett buys Coca-Cola to share in the profits from cola drinks. He has no interest in the price of Coca-Cola stock going up and down. He owns a business, not a stock. If you're in paper assets, treat it like owning a business, not a stock.
1974, when I got out of the U.S. Marine Corps, I got a job at Xerox. And so I'm in downtown Honolulu on Bishop Street, this beautiful office building and all this. And in 1974 was when the first 401k came out. Now, all of a sudden, they were looking for financial planners. The difference was I had already started investing in real estate while I was still in the Marine Corps. So I got out in 74. I already had a couple of properties. And so I would go, they were hiring school teachers, anybody who fogged a mirror, and guidance counselors, whatever it is. They were advertising, come be a financial planner. So at night, after working at Xerox, where I was learning how to sell to become an entrepreneur, because entrepreneurs have got to sell, that's why I was there, I would go and listen to these guys pitch me on the 401k and why I should sell them. The difference was I had a rich dad and I had a poor dad, and I was already in real estate. And the more I listened to that 401k, the more I wanted nothing to do with it.
In America, 50% of Americans don't have a 401k.
No plan.
They don't have a defined contribution, and they don't have a defined benefit, the old guys' pension plans. This is worldwide. And think about this. This will it disturbs me. There's approximately 7 billion people on planet Earth today. Between 2020 and 2030, 2 billion of the 7 billion will stop working. And they don't have any money.
If what I suspect is coming, everybody knows is coming, is this giant crash, is the people who are fat, dumb, and happy will get wiped out. And that's not one.
Say I have, $200,000 to invest.
I have $10,000. I have $100,000. I have $1 million. What should I do with my money?
What would you recommend to me?
I would say study. There's advantages between silver, gold, and Bitcoin, and you've got to know the advantages and disadvantages. So, it doesn't cost anybody to study, but it's the most important thing you can do. So that's why I recommend listening to Stan's book. The silver, I'm bullish on it because you can afford it today. It's $25. It's 50% of it's an all-time high. It hasn't moved. And green fuel is coming in. That's why I would buy it. It doesn't mean you should.
So if you had the $200,000, which obviously you do, your biggest chunk would be in silver right now of those three?
I've already taken my positions. I've already accumulated. So I bought Bitcoin when prices were low, but I had to understand Bitcoin before I got into it. And I bought my first gold coin in 1972 in Hong Kong at Krugerrand. And I bought my first silver coin in 1964 when I was 17.
Wow.
I've been in it a long time, and that's why I'm not bullish. I just love it. I am a capitalist. I am a hard money. I am not into socialist economics, which is Keynes. There was God's money, which is gold and silver, and then people's money, which is Bitcoin or cyber cryptocurrencies. And I really think it's important, especially for old guys like me, to understand the crypto world, because that's the world that's coming into view right now. And us real estate and gold guys are kind of being phased out. So in many ways, there's this battle on today between the old guys and young guys. And the old guys have got their heads up their butts. Like Buffett is anti-gold and anti-crypto. I think, give me a break. How can you be anti-something? You got to know the pros and cons of everything. And he doesn't have to worry. He makes a lot of money. And then you have guys like Jim Rickards, a friend of mine, and he says crypto is dead. And so the reason I just love YouTube is I can crank along there, I can search. I'm looking for the other point of view. You young guys are so smart today. you're so far down the road when it comes to financial education, intelligence, but more importantly is savvy. You're aware, you know, where the old guys are kind of close-minded to your world. Look, you better check out this world of crypto, even if you're close-minded like the old guys, all right?
So I think that what you've got to start with is whenever you look at financial markets, especially a kind of a macroeconomic standpoint, there's problems and solutions, right? And actually what ends up happening is precious metal investors and cryptocurrency investors, they actually agree on most of the problems, right? So there's no secret that, hey, look, if you print a lot of money, the currency gets devalued, right? There's no secret that there's high level of corporate debt and the federal balance sheet's out of control and all of those things. For the most part, there's agreement. So I won't spend a ton of time on that. The question then is, what do you do? Right. And I think that where there's agreement on the solutions is this idea of sound money principles. Right. And so whether it's gold, silver, or Bitcoin, they all have various aspects of sound money principles. The big question just becomes, you know, gold has, let's say, 5,000 years of a track record. Bitcoin has 11 years. So, of course, there's going to be a hesitancy when it comes to something like Bitcoin. My kind of pitch to people is, look, the one thing that has an advantage, I think, from Bitcoin, or the most important advantage, is there's full transparency and the verifiability of Bitcoin. So you know exactly how much exists, exactly how much is being produced every day, and kind of the supply side of the supply and demand equation is known with 100% certainty. And so it's just a matter of generational divide, right? Older folks usually aren't used to kind of touching all the digital technologies. Younger people are. And so you kind of pick your asset, but they both have sound money principles. And I actually think both of them will do well coming out of this economic crisis.
So this is why I converted over to Bitcoin. This is my reason, and it was Anthony that cleared it up for me. Is that at the same time that the Fed is printing trillions of dollars, Bitcoin is tightening. So Bitcoin is getting harder and the dollar's getting softer. Would you go into more detail on that distinction? Yeah, so
if you take quantitative easing, right, that is literally the Fed printing money and flooding the market with more dollars, right? It creates a higher degree or a higher number of circulating supply of dollars. So that's quantitative easing. Now, the opposite of that, quantitative hardening or quantitative tightening, would be them actually taking dollars out of circulation, right? And so what ends up happening in Bitcoin is something that looks like quantitative hardening. So there's 21 million Bitcoin that have ever been created. Every 10 minutes in the beginning, 50 of them were distributed into the circulating supply. That programmatically was cut in half 4 years later. So after 4 years of 50 Bitcoin every 10 minutes, it got cut to 25. It then went for 4 more years. It then got cut to 12 and a half. And just earlier this month in May, it went from 12 and a half to 6.25. So the way to think about this is previously, earlier this year, there was 1,800 Bitcoin a day that was getting created and entered into the circulating supply. Now there's only 900. So if you think about the opposite of quantitative easing is quantitative hardening, literally you're getting an artificially capped supply that is becoming harder and harder to get on a daily basis. And so as long as demand stays the same or goes up for that asset, the US dollar value should appreciate. And so the key piece to this, again, why are young people gravitating towards this asset is, one, it's programmatic, right? Compare that to the Fed. People are betting trillions of dollars in the market on, are they going to print more? Are they not? What's the interest rate decision going to be, right? All that kind of stuff. With Bitcoin, we know with 100% certainty what's going to happen. And then the second piece is that it's programmatic, right? So nobody can go in and manipulate it. And so in a world where any TV station you turn on, everyone's arguing over what the Fed's doing, right? In this world, nobody can manipulate the market, right? There's nobody who can change that programmatic monetary supply schedule.
Fed is centralized banking. So central is also communist. Command and control of a central government. That's communism. Whereas what Bitcoin, gold, and silver are, they're not controlled by anybody. So one of the reasons back in 72 when I started buying gold was because the Fed couldn't mess with it. They do mess with it to some degree, but they can't print a lot of it. And that's what I don't like about saving dollars. So So explain why it's programmatic, but why I call it people's money, because there's not one person like Jerome Powell, the Fed chairman, who can say today it's going to do this, tomorrow it's going to do it. It's already been planned out for years, right? Exactly how many coins are coming out.
Yeah, I mean, look, if you look at, let's say, the ECB Board of Governors, there's like 25 people that go in a room and make a decision, right? The Fed, I think it's, about 12 people go in a room and they make a decision. And so, I've got a friend who always says there's 12 people making the decision for a minimum of 330 million people's money, right? That just kind of doesn't sit well with younger people. And so when you look at something like Bitcoin, there's computer code that was written. That computer code can only be changed if more than 50% of the people on the network agree to change it. Now, as you know, when you have millions of people who are all trying to coordinate something, nothing gets done, right? And so that code's never going to get changed. It's going to stay how it is. And if there was a change, everyone would see it happen. So you not only get
completely decentralized.
Completely
Whereas
decentralized.
The old guy system is centralized, and a bunch of old guys control who gets the cash, right?
Yeah, and a way to look at it is the U.S. dollar is a sovereign currency. It's backed by a nation, and every nation has their own currency, and they're all manipulating them, right? We're seeing everything across the world. Everyone's manipulating their currencies. Bitcoin is the separation of state and money. It's the first time we've seen a currency, right, outside of something like gold, right, where now all of a sudden, no single country can manipulate the monetary policy. And so what I think is going to happen over time is every currency will be digital. There'll be a digital dollar, digital euro, digital yen, won, etc. So the technology will all be the same. The competition will happen at that monetary policy level. And I personally believe that the separation of state and money will become viewed as the superior monetary policy, just as gold for many, many decades has been seen as the superior store of value because of those sound money principles.
Correct. And the point here is we're going to go to a break, but there's a whole bunch of stuff got to understand here, is that when the United States comes out with a crypto dollar, that's the question.